around the world, shall we? So far this year, the global markets are widely outperforming the U.S. The FTSE is up 8% year to date. The German DAX jumping 22%. That's been trading at a record high. France is up 5%. Brazil and Mexico are both up more than 10%. Meanwhile, the S&P it's up only 1%. All this as trade tensions continue around the globe, particularly between the U.S. and China. So let's bring in Mobius Emerging Opportunities Fund Chairman Mark Mobius. Mark, it's great to have you back on the show. Let's start right there, because we know there is a U.S. envoy that's going to be meeting with its Chinese counterparts in London come Monday. How much hinges on these trade talks?
I think it's very, very important. If you talk to any manufacturer around the world, you see that China figures very high in the parts and components that they use, particularly here in the U.S. So I think the talks will be very critical. The big problem, I think, facing the talks is the weakened position of Xi Jinping. I don't know if you've been keeping up with the political developments in China, but he is in a weaker position, maybe because of this problem with the U.S. and the general failure of the Chinese economy. So it'll be very interesting to find out what comes out of the talks with him and with the people in London. They're meeting in London, so let's see what happens. But I think there's a very interesting development taking place in China now.
It's such a key point, and I don't think we pay enough attention to it. We're so focused on the geopolitical ramifications of trade dynamics and trade policy that sometimes we overlook the domestic implications as all of this is happening in real time in different countries as well, Mark. I am curious how much hinges on the U.S. striking other trade deals with other countries, even if it can't get there with China right now, and does that give the U.S. more leverage, and thus does it make U.S. markets look more attractive again?
I see the key country would be Mexico to begin with, because if you talk to manufacturers, companies in the U.S., they are so dependent upon Mexico for manufacturing and for components, for all kinds of things. So I think that is going to be a very key factor going forward. After Mexico, then it's India. India will gradually replace China for manufacturing, particularly of high labor content goods, and that will be a very important component. And as you can see, Indian market is doing very well, and I think will continue to do well going forward.
Mark, how do you feel about the optics of the Trump administration's trade deals? A few weeks ago, they were saying a bunch of deals were imminent. They had this framework with the UK, and then really not much since. Do you think people or other countries are sitting on their hands a bit, trying to see how this plays out? Is it a problem that the deals haven't come as quickly as the administration suggested?
No, there's no question that the overseas, they're looking at the domestic situation. For example, they look at the Trump problems with other people in the politics, and of course the fact that the bill has not been passed by the Senate yet. So people overseas certainly looking at these things and are waiting to see where the greater opportunity will be. And the pressure is up on Trump to do some deals, and there's no question that there's going to be a bargaining that takes place with these countries. But there's no question that all the domestic strife that's taking place in the U.S. makes countries hesitant to close a deal and think that they can get a better deal from the U.S.
You mentioned India. It's rebounded the market there significantly since the beginning of March. What's the lesson there, and anything in it that applies more broadly to some other markets?
Well, the key, of course, is a young population, average age about 26 compared to about 38 for the Chinese population, 1.2 billion people, growing at 7 to 8% real growth. So that's really the secret of India and the more growing importance of India going forward.
Very quickly, Mark, you were on a couple weeks ago. You said you were largely in cash. Is that still the case?
No, I invested more, but on our new fund, we're waiting to get into India, and that should happen within the next few weeks, and we'll be able to reduce the cash levels. But we're still high in cash, and one of the reasons is because of the high uncertainty brought on by the Trump administration.